Aotearoa, and welcome to Monday's Economy Watch, where we follow the events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of claims of substantial progress and a deal we struck by the Americans in their Geneva talks with China, but no indications of anything from the Chinese. Bluster from the White House doesn't count for much these days. But first, in the coming week, US attention will shift to Wednesday's CPI data for April, although no real surprises are anticipated. There'll be April data for retail sales too, PPI data, housing starts, and the next sentiment update from the University of Michigan at the end of the week. China will report new loan data, house price data, and updates for industrial production and retail sales. Japan will release its first quarter 2025 GDP data, and both South Korea and Australia will release labour market updates. Locally, we get travel, population, retail and productivity data, not to forget the first quarter ready-mix concrete data. In Japan, household spending rose 2.1% in March from a year ago, and far better than the expected 0.2% gain. It was the strongest growth since December. Helping was that the previous retreats of spending on food basically stopped, while spending on furniture and on recreation rose to good levels. China's April CPI inflation dipped to minus 0.1% from a year ago, holding the same easing for a second month, and that was what was expected. It was the third consecutive month of consumer deflation. Within that result, food prices were up 0.3%, but beef prices fell 4.9% from a year ago, lamb prices were down 3.8%, and milk prices fell 1.2%. Deflation was more pronounced for producer prices, down 2.7% overall from a year ago, the steepest retreat for any month of 2025. And staying in China, April exports came in very much better than the pullback that was expected. In fact, their trade surplus was almost as strong as the unusual March trade surplus. Few were expecting this good result. New Zealand exported twice what we imported from them. For Australia, it was almost the same, but the Aussies have a higher dependency on China than we do. For the US, they are still taking more than 10% of all Chinese exports, although that is down from the nearly 13% usually. But the Chinese buying of American goods is now under 6% of all Chinese imports, down from the usual 16%. The Americans may have initiated the tariff war, but the Chinese have reacted far faster. Meanwhile, China said its first quarter 2025 current account surplus hit a record high, more than treble what was in the same quarter a year ago. US demand saw their merchandise trade surplus leap, while their services deficit narrowed slightly. Across the Pacific in the US, that foreigners are avoiding travel there has been confirmed by new data that shows an historic drop in inbound travel spending. It has only been a sharper drop in the aftermath of the 9/11 attacks and the early stages of the badly handled response to COVID. The US as a travel destination is a significant reason they have run services surpluses. The travel boycott may build over fears it is unsafe, amid reports of immigration officers detaining tourists or denying entry, even for transit. Further, the American spring real estate season is shaping up to be a dud. High unsold inventories, high price expectations, and still high mortgage rates are putting off buyers during this prime selling period. And the US barbecue season is approaching, and the cost of beef is rising and rising. Tariffs are raising prices, and droughts are thinning local cattle supply. That means Americans are more dependent than ever on imported beef, especially ground beef. They are price takers, so they're paying the full premium for the supply shortfall, plus the imported tariffs. Looking north, although the Canadian jobless rate rose a touch more than expected to 6.9% in April, and that was a 3-year high, there was only a minor rise in overall employment. But in fact, there was a strong rise in full-time jobs and an equally notable fall in part-time roles there. The Canadian dollar fell on the jobless rise. The overall softness, however, probably means the Bank of Canada will cut its 2.75% policy rate again at their next meeting on June the 5th. The US Treasury 10-year yield is now at 4.38%, unchanged from this time Saturday, and up 16 basis points for the week. And the price of gold will start today at $3,323 an ounce, down $15 from Saturday. Oil prices are holding today at just on $61 a barrel in the US, while the international Brent price is still just under $64 a barrel. And the Kiwi dollar is now at 59.1 US cents, down 10 basis points from Saturday at this time, down 30 basis points from a week ago. Against the Aussie, we're unchanged at 92.2 Australian cents. Against the euro, we're still at 52.5 euro cents. That all means our trade-weighted index starts today at just under 67.6, and little change from Saturday, but down 20 basis points from this time last week. And the Bitcoin price starts today at $104,041, and up 0.9% from Saturday. Volatility over the past 24 hours has been modest, at just under plus or minus 1.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.